I'm just going to do it in a video form because I thought if we try to talk through it before you see the whole presentation, it might be difficult. So I just want to put a brief intro about investments, then we can build from there, as I said previously. So first up about the investments, the key thing to understand and to get the mindset in the proper channel is that investments are not complex, they are not new. Everyone does it almost on an everyday basis. That's the key part. People have been doing investments all their lives and they will continue doing them without fully understanding that they're investments. That's key for me when you look at the background about investments. But I'm also going to use this picture. It's from Robert Kiyosaki when he wrote the book Cash Flow Quadrants. Here in this picture, I just want to get the background of investing right and link it a bit to Christianity, because there is a big disconnect. From the whole video, when I'm presenting it to you, that I'm going to present it from a capitalist perspective. You are going to shift it back to a Christianity perspective. You can do that job better than me, but I'll approach it from a capitalistic perspective, and the shifting to the other side, you'll do it with ease. So this is what Robert Kiyosaki was saying. He was saying there are 4 kinds of people in the world, and you can analyze them by looking at their cash flow, how their cash moves into their hands and out of their hands. Then you will know them. You will know them at their soul. At their core, you will know who they are and how to treat them. And from a capitalist perspective, once you understand a man, what his soul is all about, you don't try to change him. You leave him where he is. Because the capitalist perspective is that he wants as many employees as possible. That's why there's 95% of people in this part of in these 2 quadrants. The employees and self-employed, these are basically the same people. They are all employees. I don't care how much somebody tries to differentiate themselves, or they are all employees and they have the same problems. And what is funny and a serious indictment to the church is that in the Bible, it talks about no debts, plenty of money, abundance, freedom, and all these are found in the investor. The investor does investment. That's where they are found. No debt, abundance, freedom. That's where the church should be. That's where the church should be moving their people to. But as I say, it's an indictment to the church in that most of the churches, as they say, it rots from the core, from the head. Most pastors are here. They have the mindset and the soul of an employee. And for them to shift to there, it's near impossible, because you will never shift to an employee to an investor if you don't know what an investor is or what investments are. And that's where you get the notion that most of the people who are here talk badly about these ones and these ones because they know not what these do. And they don't understand this. And to find a pastor who's here talking badly about an investor and is a Bible reading pastor, it's scary to me when I look at it. Because once you understand this and you understand the Bible, what the Bible says, you know that you're not supposed to be there. A Bible reading employee, let me not be too critical, but there is something missing if he's a Bible reading employee and is not trying to get to be an investor. You will deal with that. You're better off dealing with that, but there is a serious disconnect, a serious problem there. That's why I wanted this picture as an intro, because all Bible reading people should be here or thriving to be here. No debt, abundance, freedom. And how do you become a kingdom financer when you are here? You don't have extra resources. You have a problem of insufficient funds on this side. So with that problem of insufficient funds, you cannot sustain your own life. You cannot finance anything else because these people are the ones who finance businesses to employ these others. So to be a kingdom financer, you need to be an investor. It just doesn't work any other way. So, yeah, but that you can look at this and expand on it. But definitely, my Bible says no debts, abundance, freedom. It doesn't say God designed me to have hard work, no security, no time, large debts. That's not how I understand my Bible. And that's my take is any Bible reading Christian should strive to be an investor. That's my intro. Let me leave it at that. And I will say, I'll come back to the concept of everyone doing investments on a daily basis. But I want to touch some points before that. And oops, I should have had my notes earlier there. But yeah, I'll just go with this video, and I don't even have my picture, my photo on showing on this thing. Okay. I'll skip that. It should be like a podcast, no problem. Okay, the next part I want to deal with is from a teacher's perspective. As a teacher, you always start from the known to the unknown. But that's where the trick comes in with the investments. Investment in our world system as it is, from a capitalist perspective, it contradicts the principle of teaching. In that, when somebody talks about investments currently, they start from the complex, complicated, unknown, so that this concept comes out as if it's the most difficult thing to do. But when you teach people or teach kids, you start from the known to the unknown so that you gradually take them where you want to go. But with investments, the capitalist system approaches it. It's difficult. It's for a few people who can do this. So that most people get scared of it, don't understand it, and remain in this quadrant here. That's the objective. So it's taught deliberately complex, too many acronyms, too many definitions of difficult things, and lots of mathematical formulas. At the core, investment has been done before even the whites came. People were doing investments. People were trading. It did not need the high complex maths or abbreviation which people try to confuse everyone by. And the objective of this intro is simple. And I'll repeat it at the beginning now and at the end. At the core of it, the value which I'm trying to bring here is that the purpose of investment is to increase what one has. Is to increase what one has. I'm staying away from definitions or technical definitions of investment. I want it to be simple and to approach it from a perspective where I'm talking to an everyday people. So that, because investments can be understood by anyone, even a school kid. So I'm targeting it and approaching it from an everyday people, and that's how I'm presenting it. And the problem to be addressed by investment. If somebody says he wants to do investments or wants to get involved in investments, at the core, they are solving a problem of how does one increase their wealth? That's the core principle which is being solved. And I'll deal with the investment process so that I decluster it and demystify it per se. Because the process of investment at the core, it's due diligence and critical thinking to achieve vision, one's vision. I'll put that across again. The process is due diligence, critical thinking to achieve one's vision. If one of those things is missing, the investment case is gone. If one of those is missing, you cannot say you are an investor. Due diligence, critical thinking, with the objective of achieving your vision. What do I mean by due diligence, or to break it down a bit, is to do some research, fully understand, create some checklists of yourself, what you want, what you don't want, and understand that in the concept of what you want, where you want to put your money. That's due diligence, but there is more to due diligence, and you can expand on that. And also to understand how the game is played. Because one should never put their money when they don't understand how the game is played. In fact, even in life, whenever you get involved in something and you don't understand how the rules are and how it's played, and according to whose rules is this game played, you have lost. Because you don't know how the game is played, but you're playing. And also from this concept, you have to understand it. Are you going to play this investment game according to the world system, the capitalist system as it is, or the Christian system? You cannot have it both. So that's another concept which one has to get themselves cleared in their mind. That's on due diligence. And critical thinking. Everybody needs to do critical thinking several times. And we have dealt a lot about critical thinking, so I'm not going to spend time on that. And vision. If you don't know where you're going or where you intend to go, you cannot be an investor. And also on vision, you have spoken on that a lot. But from a capitalist perspective, they don't want to mention the word vision a lot. We use mandate alignment. Like, what's your mandate? I'll give an example. I worked at a development bank. In development bank, before we get an investment proposal, we look at, does it fit where the bank's intention is? The bank's intention was developmental. So if you brought a project which was going to be self-sustaining for yourself and increase your own wealth, but no developmental case can be established, we don't touch it. So as with investors, and if one wants to be an investor or do investments, as a Christian, there's no way I'm going to be investing in investment cases or businesses which are tobacco related, or medical setups which don't go according to the Bible, where their key focus is abortion. So those mandate issues, we don't really like to use the word vision because it can switch on too many bulbs in people. We like to, remember, capitalists, we want to keep the people there. And we're not in the business of trying to open up their eyes. And that's how you're going to have to shift it dead when you teach this. Because the world system is not about opening people's eyes here and moving them anyway. The more employee the capitalist has, the better. So on this mandate, it's key for somebody to understand where they want to go and what they can do and what they don't want to do. But it talks to vision also. If you understand vision properly, vision will tell you, will be your guideline, guidepost, and give you direction, because there are things which don't align with your vision, you won't do those things. So investment process, in its simplest form, it's a due diligence, research, critical thinking. Think for yourself. Don't use the mindset which you are fed by the news or people whom you don't know what their background thinking was. Think for yourself, critical think. If somebody tells you that this is the way things are, apply your mind. Does it make sense? Is it biblical? Is it what you would consider? Is it just an opinion, or is it a fact? Is it a principle or just hearsay? That's key. And vision, I've touched on that. Then the application of investment. This is where I want to prove my original case of saying everyone does it every day. I'll use examples because I don't want to use technical terms. I'll just use examples to show that everybody is involved in the investment game, whether you like it or you don't like it, but you are involved. So it's not an option. It's not something when you're teaching people about investment that they have an option to do it or not to do it. It's like somebody who's working, they have no option but to pay tax. So investment is not optional. It is your everyday activity, you just don't know it and it's given a different name. And some of the investments you are even forced to do them, and most of those are the dumbest investments you'll ever get into. But I'll touch base on them later. Let me give some examples of application. If somebody wants to buy cake, or he has cake and wants to sell them, I'm talking old school now. Our grandfathers, our forefathers, they were doing that. They decide, now I'm touching on due diligence and research, before they buy a type of car or a type of cake, they want to understand that where they are staying in that environment, are these cake going to survive? Are these cake drought resistant? Or rather drought tolerant if it's a drought area. So cake vary. So you don't just buy any type of cake, but you buy cake which can survive in your area. You do some research and understand what type of cake they are, how they survive, and what type of diseases they are likely to suffer from, and how do they relate to the temperatures. Like if you are in a semi-desert area, what type of cake do you have? It's not going to be the same as if you're in a coastal region where there's too much greens and humidity. Those are different things. So the person doing that buying of cake, they always knew that. That's why you find them buying the wrong cake for the wrong area. So that whole process of buying cake, it's critical. There is some thinking which goes into it also. And looking around what type of cake are thriving in this area. Then we take an example of real estate. If somebody wants to invest in real estate, you don't just build buildings which the people around there are not going to be able to stay in. If predominantly the guys are mine workers or agricultural and they're earning a lot less money, you build low standard houses which they can afford. So, but if you are building for directors and executives, you build high quality homes. So it differs now. You have to understand your people. So you have to do some thinking, some due diligence and understand. And what are their intentions? Are they coming here just to work and earn some money and go back to their rural areas? Or these guys are building something to stay here forever? So that talks to their vision. What's their game plan? Where are they going? So, and these decisions are decisions which people have always been doing. People deciding where to stay in the olden days because of whether they will be able to plant their crops there, able to breed their cattle there, would there be enough water for them to survive? Those were investment decisions. In real estate, deciding where to go and stay, one had to look at that. And what were they intending to achieve? If they were predominantly hunters, they would be trying to get closer to a place of water, a water source, where they would be able to survive on hunting. So investment, it is due diligence at the core, and some critical thinking and research there. I've given two examples of cake and real estate. I'll come back to them a little bit later. But also, in this day and age, everybody talks about investment as value risk management. Those are the words which are usually thrown in there. But to simplify that, basically investment is all about trying to buy things at the cheapest price and sell them at the highest price so that one makes a gain. Remember, the core purpose of investment, I said, is to increase one's wealth. How do you increase one's wealth? By using your money to acquire stuff at a cheaper price and expecting to sell it or have it grow to a higher value. That's what it is. So investment is at the core basics. It's about buying and selling. But it's not about salesmanship. Salesmanship is this employee here. People who do investments employ salespeople to go and sell their stuff at a higher price, and they buy it at a lower price. So the salesman is an employee, but the process of investment is the process. At the core, simplest form of it is buying and selling, trying to buy cheap and sell higher. And I have some notes, because most of the times when you're involved in investments, that's why I used the word critical thinking at the very core as part of the key things of investments. Because in most cases, investments is avoiding doing foolish things. If you avoid doing foolish things, you're almost there with investments. I'll give some examples. Giving money to someone to manage it for you in doing what you both don't know is the height of foolishness. And most of these guys do it. That's why we have pyramid schemes and whatever. Those are not investments. Because pyramid scheme, more people who get involved in pyramid scheme are lazy to do critical thinking, are lazy to do research and due diligence. Because if you look at a pyramid scheme, you have to try and establish where is the money coming from. Because if you look at a business, you have to understand the whole system. How does this company produce what it produces? At what cost does it produce it? And who buys it? And is this thing sustainable? Pyramid schemes are not. And people who get into pyramid schemes, what basically they are doing is they are giving their money to someone, hoping to get a profit when they don't know what the business is all about. And for me, that's foolishness. And also in the Bible, it's clear that you'll perish for your ignorance. So if you don't want to do your due diligence, your research, you climb onto the pyramid schemes. Because if you do your time, put some time in, you will understand that the pyramid scheme doesn't have cash flowing into it properly to sustain it. It's just robbing Tom to pay Dick at the beginning, and eventually this thing falls on its own. Then, also on this point of foolishness, I'll try to be, because this is a personal video which I'm sending to you, I can go as much as I want. Retirement, most people also do some foolishness because they spend their lives here. They've never understood investments and business ownership. But when they get their retirement money, they foolishly think that just because they have money, now they are business owners or investors. They start investing in business which they don't understand because they never got trained on due diligence and research. They never got the training on critical thinking. But once they have money, they think they are business owners and investors, and they take their money and try to play in this part, in a game they have never been educated in a game which they don't understand. And that's what I call foolishness. And most of them lose their money and spend most of their retirement broke. Because when this guy comes to the business owner or to an investor, his language is wrong, his approach is wrong, and these ones can easily tell that here comes the amateur, and they will clean him up very fast. Remember, I'm approaching it from a capitalist. A capitalist won't see this as a friendly game. When a retiree brings his money this side to try and get involved into this business, this guy at their core, at the game which they play, they take money from others and keep it for themselves. So you come along carrying money and you come into this side and you don't know how to protect your money, or you don't understand what you are getting involved in. They will clean you up. That's just the way they play. And I'll give you an example also about foolishness from this end. It's the Forex people. There's lots of Forex promoted, lots of people being told to get into the Forex game and they will make lots of money. And these guys don't complain or don't publicize anything to say the Forex is a scam or whatever. No. Because if you come to play the Forex game with these guys and you don't know what they're doing, they'll clean it up. They'll be richer. It's easier to get into a boxing fight with somebody who doesn't know what they're doing than one who's also a professional. So amateurs getting into the forex game get cleaned out and off they go. And like most people who do foolish things, just like gambling, those who go to gamble, they'll shout a lot about the winnings which they did, and eventually they'll keep quiet and you'll wonder why. But they never talk about their losses. That's what people get sucked into the forex game and cleaned out. The key, and I'll keep repeating it, one has to understand due diligence, research, critical thinking, and have a clear vision of where you are going. Because a clear vision will help you stay out of foolishness. And also understand who you are. If you are here, learn from these guys and cross over. Even the Bible has lots of guys who were investors and how they did it. Learn that, then cross over. Staying here is a sign of foolishness if you're a Bible reading person. But I'll just touch on the types of investments so that people really have a better understanding of that they know investments, they already do investments. I'll take an example of what investment professionals call flip overs. That's another word which we use, but basically what it does is, I'll give an example. During a drought season, if I were to buy cattle, they will be cheap because people will be scared that those cattle are going to die anyway. So they will rather just let them go to anybody who can offer them a few rands, and they can offload those cattle because they no longer need them. They are scared that this drought is going to continue maybe for the next 3 months, and within these coming 2 months, those cattle are definitely going to die. So somebody can come and buy those cattle because he knows he can feed them and restore them until the rainy season comes. So when that person buys those cattle, feeds them during the drought season, then sells them maybe 3 months or 4 months after the drought, that's what we call flipping over. He never bought them with the intention of keeping forever. He knew that they were at the cheap price, and the cost of sustaining them until the rainy season and selling them is less than what he's going to get at the end. So he's buying cheap, spending some money to sustain those, and selling at a profit later. That's flip over. It's also done in real estate. When you go and buy a dilapidated home or a badly kept home, and you know that you are good at renovating, or you have your means of renovating at a low cost, you do those renovations, then you can bring back that same house in the market at a market-related value, which is way higher than when you bought it as a dilapidated place. That's flipping over. Your intention was never to keep. Your intention was, you knew that your core skill was renovations, and you bought this one cheap and renovated it and sold it. The same goes with cars. There are people in that business also. Buying non-running cars, fixing them, selling them over. Then we have what is called private equity, but I won't deal with the technicalities there. Basically, what it does is you borrow money and you go and buy something which you know is trading at a cheaper price, and you hold it for some time until the values pick up and you sell it. You're flipping over businesses. It's more like flipping over business, but you're not even using your own money. And then we have capital investors, what I would call compounders. These are typically also called as, with a derogative name, as farmers from the professional investors in the offices. What these guys do is like, why they are called farmers is because a farmer will buy seeds. Seeds are not that expensive. Plowing is not that expensive, but the guy has to be patient. He throws a few seeds here, but he expects to get 100 times or even more for the seeds which he put on the ground, but he has to be patient and go through the season waiting for these things to grow. But he's a serious compounder because whatever money he puts down will be more than 100 times what he's going to get. That's what we call a compounder. We call that a farmer, derogatively, but yeah, those are capital investors. And the Bible talks a lot about farming. It doesn't talk that much about flipping private equity, because private equity also makes you seriously in debt until the transaction comes through. Then we have what we call investments, which we call butchers. Butcher. Basically, we look at this guy as the guy who kills cows to make his money. It's also a term which, if you want to present it nicely, you can call it retail, like retail stores. They're in the same phenomenal, but I'll use butcher so that even an everyday person understands where I'm coming from. If your business is going to buy a cow, come and cut it into small pieces and sell those pieces at prices which collectively will be more than the price of the cow which you bought. That's what a butcher does. A butcher buys a cow, chops it into pieces, and sells those pieces at higher prices. Net, the total cost of selling the pieces would be way higher than the cost of buying the cow. That's what a butcher says. That's the same thing with retail stores. They go and buy in bulk, then come and sell in small pieces, and that's how they make their money. That's another way of an investment. So here I've been looking at types of investments so that people realize that these are investments which they do every day. The lady who sells at the corner of the street, it does retail. He goes and buys oranges in bulk and comes and sells them one by one. It's like a retail store or a butchery. The farmer at home who has a field there where he plows is a compounder. The guy whose business is to fix cars and to resell them is a flipper. So, and why am I bringing this in? I'm just showing the types of investments that these investments have been done by people forever. It's not new. And most people are doing this, but they are doing them as employees, working for people who are actually running these as businesses. Then there is also a concept of relative value or opportunity cost. This concept basically is talking to the issue of where do you place your investments? What do you get involved in? I've just given examples of investments. Which one are you going to choose? And if you have 3 options, which one do you choose? But that should talk to your vision, where you're going. 2, what skill sets do you naturally have which will be aligned to what you are doing? Remember, I said foolishness is doing something you don't know. So which type of investment and what is the relative value you are going to get with that one will be driven by your vision, your innate skills, then that will design that. But from a capitalist perspective, when we talk about relative value and opportunity cost, we are always looking at which investment is going to give me the better returns. Because we never look at it from our own skill set. We look at it from the returns based on the concept that whatever we want to invest our money in, we know there is enough of these employees with skills to do that. All we need to do is to hire them and work for us. So the concept is no longer my skill set. Now the skill set is there in the market. I can always employ them at a cheaper price and pay them less and sell the goods at a higher price. So that's just the difference there. And cost-benefit analysis. This one I want to touch it and I'll give it a simpler name rather than this cost-benefit analysis. I'll just call it foolish maths. We've seen lots of people trying to cross this line from being an employee to an investor. And they make one of the worst mistakes. They don't know how to do due diligence. They don't know how to do critical thinking. And they don't do their research. They end up buying something and selling it at less than what they bought it for. Yeah, you find somebody goes and buys oranges, but they don't do their maths as to the cost of the oranges were 50. If I am selling them at this price, am I going to get more than 50 or less? Add in the transport there. And find somebody having missed that maths. Then you will never be in business because you won't be able to go and restock and stuff like that. So, yeah. But that one that you can deal with, cost-benefit analysis. But at its simplest term, without being diplomatic, it's just a foolish maths. And investment is full of acronyms. They're just there to confuse people and make sure that, because investors want to make this part complex and make sure that not many people get into it. That's why 5% of the people are here. They built in investment, we have terms for these things. They built big walls, entry. Even when you are doing your SWOT analysis, there's always barriers to entry. Barriers to entry in most cases, they're by design. These guys on this side, they design those barriers to entry so that these guys stay where they are and these ones stay in their lane. And this 95% exist. And they also used another word called moat, so that there are things which will make it difficult for you to move from one side to the other. And this is where the return on investment comes in. Because most of these guys here, when they try to cross that side, they try to borrow money from investors to come and invest. And investors make sure that the amount being borrowed is expensive. And these guys, because of their poor cost-benefit analysis, they don't do the maths right. And they'll end up failing to repay back and their business crashes. That's a barrier to entry. Because if this guy is going to borrow you money to come over to be his competitor, if you apply your mind and you do some critical thinking, you will realize that he's not interested in helping you. So if you see him as if he's helping, then there is something wrong here. Watch the equation. Watch the system which is being played on you. This guy, by design, a true capitalist, is not going to help you to cross over. If you're going to cross over, you're going to cross over by your own and using different principles from the principles which he's using. Because if you follow his principles, the worldly principles, you're not going to cross over. He's going to make it difficult. His purpose is to mitigate his business, make sure he is and his few clans are the ones in this business, not everybody else coming in. So here for the return on investment, I'll give you a simple example. There are times when a farmer will go to where cattle are being sold, but the price which is being offered, he will reject it because he sees more value in his cow than the price which they are offering. He would rather take his cow back and wait for another sale period than give away his cow. What has he just done there? He has just done a return on investment. He has looked at it as, is it worth giving them my cow for this much? If he thinks it's not, he will refuse to sell. That's what this concept is, an old concept, return on investment. It's been there for ages. That's why I'm giving the example of cattle. And in the village, it's used almost on a daily basis. When people try to sell each other stuff, if the price is not right, the deal falls apart. Even now, people, when they're trying to sell their cars or houses, if they think that what they're being offered for that house is not what they expect, they won't sell. So that's what return on investment is basically. You have something, because I said investment is at the core, it's about buying and selling. If somebody is trying to sell you something which you don't think is of that value, you're not getting involved. Then the game doesn't play. Just in closing now, I'm just going to run through some of the key effects. Key purpose of investment is to increase one's wealth. And you have to look at it being driven by the concept of vision. Is it generational or is it consumer-based? Generational, I'm talking about somebody with a long-term mindset. The type of person who will plant a tree knowing that they will be dead before the plant can produce a shed. Somebody who's interested in building foundations of small-time businesses, big businesses, but they are aware that during their timeline, they are only going to build the foundation. And these are the next generation will grow it from there. Then there is a consumer-based mentality, which is predominantly from these guys. What they're building, they're not building anything. They're just getting something to sustain them, to put food on the table. Those are consumer-based mentality. And yeah, all the investment is the type of investment which I was talking about, of flipping. They are not compounders, they're just flipping, getting something and selling it and getting some cash and buying food. It's not the type of business which you can leave for your own generations to come. And This is usually determined by the vision which one is pushing. And some key things: if there is no vision, there is no investment. So when you help people with this concept of investment, I think you have to start from to make sure that the person fully understands the vision. Because, like we say in the capitalist investment world, if there is a mandate misfit, or the plans of somebody has and what they want to achieve out of it is misaligned, there won't be an investment, because the investor won't want to play in that game because he's not seeing returns. And also, from when you're teaching somebody, if the person doesn't have a clear vision, this is the type of person who will be in and out or wavering without any commitment. You cannot talk investments with that type of person. Also, if the person doesn't understand time management, and time management is non-existent in his mindset and in his way of thinking and doing stuff, we cannot have that person as an investor. Because if he cannot manage his time, he doesn't know how to plan, he doesn't project manage things, he doesn't know what is going to happen at what time. So this person doesn't know time management, therefore he doesn't have a project management skill. He's the type of person who will want to do things, but he won't plan when the things are going to be done, who's going to do it, what resources he will need. And that type of person cannot be an investor. He doesn't have the skills. I'm just putting across people who won't fit in. Those people whom one needs to either teach them the basics or just ignore them as an investor. So if the person doesn't have a vision or hasn't understood what vision is, he has to go back to the basics and sort out his vision issues. If they don't know how to do time management, we can't talk with them to be investors. They have to go back to do the basics. Here, time management, at the basics, I'm talking about calendar management. Get your vision, break it to the objectives, break it to the daily activities, and be able to review that. If that person is on slippery ground on those, or doesn't have the discipline to sustain that, they cannot be investors. They have to go back to the basics and learn time management and calendar management. Now I'll talk a bit about the system, the investment system. The system is set up so most people think investments are difficult, specialized fields, and that's just false. But this falsehood is brought from the concept that most people in investments, in investment management, they are there to manage other people's money. So if they make it appear simple what they're doing, everybody will try to do their investments on their own. And they won't have these investment management fees which sustains them. So that's why they will always present the concept of investment as the most difficult thing which nobody understands except these few people, these few mathematics geeks. But as I've been explaining, there's no maths there. There's no heavy maths involved there. That's the falsehood about investment. That is specialized, difficult. There are lots of investments. Everybody with a skill set in a specific area can do investments in that specific area. Take, for example, a mechanic. He can start doing investments around flipping cars, buying cars, renovating them, or sorting them out, then reselling them. He doesn't need maths there. Somebody into the property space who has been in the business of renovating houses can start buying houses at cheaper prices, renovate them, and resell them. There is nothing complex about that. If you are good at following orders or copying, you buy a franchise. They'll give you all the methodology and the systems to follow. You follow that, you're into the business. It's investment. So investment is not that complex. It's so easy to move somebody who has been managing businesses as an employee to a business owner or to an investor. But it's the mindset which is so difficult to change. That this person who has been managing this business gets it, what needs to be done to run the business successfully. But he still has the soul of an employee. It's the change of the mindset which is so difficult. And the system is structured that they stay in their lane. They never cross over. So the system is there to defeat him, and he has to make a mindset shift. And most of these never know how. That's where maybe the coach can come in to work on the mindset for the person to cross over and understand that the system is built for him to stay in that lane. But all he needs is a caution, the willingness to do the shift. But investment is not difficult. It's not specialized. Those are just falsehoods. And also people are led to believe that in investment you win some, you lose some. That's wrong vision setting exactly there. The system will tell you that this is very risky. This is very dangerous. They are playing a mind game to keep you in this lane. And they'll tell you that you lose some, you win some, but there's a chance you lose everything. It's mindset indoctrination. And if your vision is weak, you'll stay in the lane. You'll have small dreams, small plans. That's the whole concept. Because these guys who are here, they will use insurance, they will use protection, they will find businesses which are unlikely to crash and invest in them. If there is a high risk of the business crashing, they won't invest. But they don't tell this to this guy. This guy doesn't understand risk management, doesn't bother to understand insurance. And there's this concept which is even legalized, where there's the idea one needs professionals to do it for them. That's the capitalist fraud. That's the fraud which capitalists have brought into investments, that they give everybody the mindset that for you to buy stocks, you need to be a professional. For you to do investments, you need to be a professional. That's capitalist fraud. It's pushed by these guys to make sure that these guys stay poor. Because I can tell you now, you do some little due diligence and some little critical thinking, you will understand that there are some businesses which will be forever growing, which are unlikely to make losses. For the past 30 years, these companies have been providing returns of more than 15% annually. So just take your money, invest in them. What are these guys called professionals doing? They're not doing any much better than that. It's just the mindset which this guy has been told that he cannot do investment. He has to give his money to this guy so that this guy does investments and decides how much money he will give him back, and he will keep most of it. That's just capitalist fraud of all time. If you don't know how to do investments, what you need is a coach to coach you to do the investments, but you don't need to take your money and give it to somebody else to do the investments for you forever. Teach you to cross over, and that's the role of coaches. And don't buy into this media mentality and what is being pushed to you that you need to be a professional to do investments. I've shown in this presentation before that investments have been done. People in the villages are doing investments on a daily basis. They are farming investments, they are cattle selling investments. They are doing investments. But once you get some money from your pension and stuff, all of a sudden you're incapable of that. You have to give it to somebody else. That's capitalist fraud. And on retirement, they have legalized that everybody who gets to work, their money has to be managed by these investors for them on their behalf, by these investors on behalf of employees. Why? Because employees don't know what they're doing, so their money has to be taken from their payroll to an investor. Unless if you're an employee and you can prove that you have investment training, then you are allowed to do your own investments. And what's funny about these retirement funds, it's another capitalist fraud, because when the markets are going down, and everybody knows that the markets are going down, it's illegal to short the markets to benefit from the markets going down. No, you can only benefit going up. So these investors, by law, they are forced to make sure that your investments are kept invested even if the market is going down. And here's what they do. They can tell that the market is going down, there's a catastrophe happening. They will be the ones shorting the market and buying the market. Because all they can do for your funds is that they can withdraw them when the markets are going down. So they will gradually withdraw your funds, sell on your behalf, and be the buyers. Sell on your behalf and they'll be selling them, you'll be giving them to them. But it's a scandal which these guys do. But legally, you're not supposed to short the market. So you cannot benefit when the market is down. In a bear market, these retirement funds are losing money. And somebody is gaining, and that somebody is the investor. That's how the game is schemed. And that talks to you not knowing what you're doing and accepting this retirement funds mentality. On this one, we can expand on it a little bit more at some other time, but retirement funds are a scam. Key to it all, when we go back, remember I talked about value and risk management. Trying to find value in something and protecting yourself. People need to get educated on insurance, on using insurance properly. These guys insure themselves against losses. These guys don't. And here's the funny thing. If employees want to buy cars, the banks force them to also buy insurance. If these guys want a loan to buy a house, the banks and the investors who put the money in force the employee to buy insurance so that these guys' assets are protected. If this guy loses his job, somebody is going to pay the investor so the investor doesn't make a loss. If the car is stolen or involved in an accident, the investor doesn't lose his money. But here's the funny thing. When this guy invests his money, he doesn't buy insurance. Invest in retirement funds or whatever, invest in his small little business where he don't know what he's doing, he doesn't buy insurance. And if there is anything which happens, he's broke. Like now, most people are crying that the economy has crashed, you are going to make losses, serious losses. At the core, this guy is not making losses. The insurance company is going to reimburse him. The guy who's actually crying is the little business here. The self-employed and the employee who gets fired. It's not the investor. The investor insured his business. So people have to get educated on how to use insurance properly as an investor. That's your risk management element to protect what you have got. For you to grow your own, you have to also learn how to protect it. And just in passing, it's always better to operate as a business owner or an investor. Don't operate as an individual. Register a company. I think that you can deal with that some other time. Just in closing now, investments. As an intro to investments are not new. Investments have been done on a daily basis. And people have been doing investments and they'll continue doing investments. And everybody does investments. You might just not understand them. This guy buys houses. Those are investments. But how he does it is the issue. He's not well skilled at it, but he's forced to do it anyway. I'll close on that date and we can have a follow-up discussion to expand on the issues. But I just wanted to bring home the concept that investments are everyday activities and everyday people do investments. The only difference is that they do it with lesser understanding. And at this day and age where we have internet, we have YouTube, we have access to everything, people should find it easy to find a template for a due diligence, a template to do a research on any subject. Critical thinking, for me, should be a compulsory course to anyone. If you did not do it at school, which is rare, going to YouTube, find channels to do what critical thinking is, how to approach something. That one is mandatory for me. Because if you don't do it, life is going to beat you up and beat you up big time. If you don't know how to think for yourself and you are media driven or stuff, those who know how to do critical thinking can suss you out in less than 2 minutes and say that you don't know how to do critical thinking, and they will wipe you out. Remember, investors, that's their business. They understand the language, and once they realize that you don't know how to do critical thinking, they will clean you out. You're easy fruit, you're easy target. So for me, it's core that people learn how to do their research, their due diligence, critical thinking, and have a clear vision, clear and purposeful vision. That's what investments are at the core. We can then go back, touch base again and make some detailed analysis. But from where I stand, I think with these basics that you can literally do, you have done investments in lots of businesses, and you can teach people investments to any level. Because once you get the person to understand how to do research, you are a doctor, you know what research is. Due diligence and critical thinking, those are your things, and the vision. So at the core, you have all the pieces for investments. The key thing is just to bring it down to the level of the everyday person. That's why I always also have issues with people who have done master's degrees. They've been taught how to do research, but they're struggling in life. It's a tricky one, how they end up in that situation. But yeah, that was the basics for investments and aligning them to how I think you can approach it and expand on it in any frame, and how to teach it. Because my take, if you are going to teach it from a biblical concept, we have to go back to this picture which I have here. Why I think being an investor is biblical, and why being an employee is something else. That's number one. And then when you want to teach people about investment, it's more of the investment process. How do they do their research? How do they do their due diligence? How do they do their critical thinking, their vision? What's their mandate? How is it aligned to what they're doing? Once you get those concepts, which I know you are way skilled on them more than me, then you can just get the investment process clarified for them. But the key for me, and I'll reiterate it at the end, the indictment to the church is when the pastor has an employee mentality and a soul of a slave. It's near impossible for him that he will ever teach anybody to be an investor. And the Bible reading pastor having that problem is a big issue, because the Bible, without using the word investor, it talks about no debts, abundance, freedom. If this is what capitalists know investors to be, this is what Christians should be at. I'll close it there. Thank you. We'll chat base once we have gone through this.